Hello, my name is Steve Bigelow with the Candlestick Forum. We're starting to see a little bit of weakness coming into the market. We can see that the Dow is in a wedge formation. Wedge formation illustrates what's going on between investors, the bulls and the bears. There's indecision going on. So right now we have to watch to see whether they can break it out to the upside or if they break it down to the downside. Now, that alone may not give you clear indication, but when you add the other indexes to the analysis, such as the NASDAQ, that's had a nice strong uptrend, broke through this level. But notice what it did over the last couple of days. It gapped up on what is today? On Wednesday. And remember what happens in candlestick logic, or the candlestick rice traders logic. Where do most people buy? They buy exuberantly at the top. When do we know there's indecision up here? Because we can see there's a shooting star doji. Today, they opened it and they traded lower. Now, they started buying going into the close in the last 10 minutes, but you're starting to see the possibility of indecision up here. So get ready to take some profits. And that is what we're going to be working on in a full day training, September 18th. We moved it from the 11th. And that's going to be, how do you know when it's time to sell or time to go short? And this is based upon if we know what patterns to get into when it's time to buy. When Netflix, with our 2+2 analysis, did a J-hook right here at this level, knowing we're going higher. When is it time to sell? When the indicators start showing there's a strong possibility of a change of investor sentiment. One, the signal itself. Today they did a shooting star. Two, look how far away you are from the T-line. Remember the basic rule of candlestick analysis? The further away you move from the T-line, the higher the probability they could come back and test it. And three, wave one and wave three are usually going to be approximately the same on a J-hook pattern, which looks like it's equating to that right now. Add that all up based upon that you're in the overbought area. The probabilities upon seeing weakness tells you there's been a change of investor sentiment. Remember, everything we analyze on a candlestick chart is just merely common sense put into a graphic depiction. Once you realize that, now you can start moving a lot quicker for taking profits or closing out trades well ahead of everybody else. So every time we see a situation where we have a strong buy signal, like our Morningstar signal on a recommendation of MLCO, gap up through the T-line, what was the next likely target? Up here to the 50-day moving average. When it gets to that level, we've got much more clarity to see what might be happening at this level. Notice they haven't been able to get through the 50. If they start trading lower, we want to start taking profits, because that's pretty good evidence that the selling is now showing that they were resisting at the 50-day moving average. So this is not rocket science. This is basically witnessing what type of signals are occurring at levels that everybody else is watching. So we've got strong profits in Oscar. Look at the bullish flutter kicker signal, followed by a doji sandwich. More conviction that there's more upside. Then another doji sandwich that took you right up through the 50. So what are the common elements that happen in investor sentiment when you've broken through a resistance level? They'll usually come back and see if that resistance is going to act as support. We can see much more quickly whether that's going to happen. And we're starting to get a little bit more apprehensive about, or not apprehensive, but attentive as far as looking for sell signals up here, because look how far away we are from the T-line, one, and we're climbing up into the overbought area. The aspects or the elements that we can put into our analysis on a candlestick chart is just graphics telling us what's happening in investor sentiment. Again, it comes right back down to the basics. Where do most people buy? They start buying exuberantly at the top. How do we know we're near a top? Overbought condition, away from the T-line, exuberant buying. These are all indications to tell us we should be a little bit more alert as far as getting ready to take profits. So whether you're buying or shorting, a bearish kicker signal, where do you think the likely targets are going to be? The 50 or the 200? Today, the short position hit the 200, getting down into the oversold area. So what's our logical analysis? We want to see if they're going to be buying at this level based upon some bullish signals. That tells you that's what everybody's watching to see if it's time to buy at a support level. So we will be doing a 4-hour training, an all-day training on Saturday, September 18th to go through what are the elements that tells you it's time to start taking profits or going short. Again, candlestick logic, where do most people buy? This is what we can identify with much more accuracy, knowing what happens in human nature. That'll be it. We'll see you in the chat rooms.